There's a thing called going uncollectable with the IRS, which means that they can't take any of your stuff, even if you owe a lot of money to the IRS. You'll have to give them financials, and they'll have to determine that you don't have enough assets or income to be able to pay the debt. And or if they force you to pay the debt, it'll cause undue harm to your finances and to you. And they review this every year. But when you go uncollectable, they'll put a IRS tax lien on your person, most likely. And anytime you want to sell a property or a boat or anything else that's registered with the government, the IRS can come in and take all that money after the bank is paid off if there's a loan. But here's what's amazing about going uncollectable. You probably know that the IRS has 10 years to collect any money from you once they assess you. Most of the IRS remedies that are there have what's called tolling the statute, which means that, like in an offering compromise, while you're doing the offering compromise and things are going on, that 10 years gets extended for however long things are being determined or processed or the bankruptcy takes, and now it could be 10, 11, 12, 13 plus years. But with CNC being uncollectable, you can stay in a place where the IRS can't collect. Yes, you have a tax lien, but you don't have to pay any of the debt. They can't harass you for as long as you need, even if the statute runs out. And now you don't have to pay anything because it's past the 10 years and you didn't have enough capability to pay that debt. Now, this doesn't apply to everybody, but it can help, especially if there's a lot of years left on the debt that you owe and if you don't have a lot of means with which to pay back that IRS tax debt.